Alrighty, guys, so we're going to go over 3 stocks in this video. We're going to break down the charts. We're going to go over my entry and exit points. And, of course, we'll break down the markets at the end of the video and see where the S&P is trading at, the NASDAQ, the Russell, the Dow. So if y'all find value, hit that like button. Make sure to subscribe. And, of course, take a sip of your coffee. We all need that coffee today, guys. And don't forget to get up to 15 stocks for Moomoo. It is free money. Link down below. We'll talk more about that later. And now, let's just dive into it. So the first stock on the list, let me pull up my notes here, guys. I forget what it is. It is DraftKings, ticker symbol DKNG. So this is one that we called out a couple of days ago when it was trading in the downwards channel, and now it's starting to break out. Look at this. Again, we called it out a couple of days ago as it was trading more towards the top of this channel. You can see right here that it's been trading in for months at this point. You guys can see ever since, well, maybe not, well, I guess it is, it's been about 2 months since the middle of February. It's been trading in this range. You guys can see for a good amount of time, and now we're finally starting to break out. DraftKings is up over 4% on the day right now, up about 80 cents, and it's cracking back over 20 bucks a share for the first time in a couple of weeks. Yeah, a couple of weeks. It's it hasn't been above 20. Now we're starting to break past that level. So to me, guys, this looks like it's fully breaking out. We're above, again, the downwards channel. We're breaking out of the recent highs, and we're above the moving averages. We have a golden cross. So by the looks of it, this could be going anywhere from 21 to about 21.50 in the very short term. Let me actually draw out this trend line so you all can see it. You guys can see right here 21.50-ish. That was the high from back in the end of February, pretty much when this downwards channel started to play out, or started to form rather. So now we're seeing the breakout, and that's where initially it could go. Now, if it breaks out of 21.50, which would be huge for the bulls, into the 22 plus level, let me actually set my alert now at 22 bucks. That's where DraftKings could really start to go towards levels it hasn't been at in a while. And I mean a while. Look at this. Back in when was that? Back in August, it was also struggling at about $21, which you guys can probably see here on the 4-hour. Yup. So that, that makes it an even bigger resistance, not only from a couple weeks ago, but also from back in August. 21.50 was the high. So if that level does end up breaking, now we're talking levels that we haven't been at since the end of 2021, which, mind you, DraftKings was crashing way before the overall market peaked. I'm not sure if you guys remember that, but the market in general peaked at about November, December, right, for the most part. DraftKings was downtrending since March of 2021 because it hit roughly 75 bucks at that point, and it was downtrending. But by the time the overall stock market peaked, guys, DraftKings was already down 61%. That is no joke. I'm sure a lot of you remember that, but just doing a quick little recap on where this thing has been at, right? So if we do break 22, originally, or rather initially, where this could be going is probably 25. You guys can see if I zoom in here, 25 is where this thing peaked out at back in February of 2022. So about a year ago, we were peaking out at about 25. So that's where I'd be looking at it initially. If we end up breaking 21.50, 22 bucks, that's where it could be going. And if 25 were to break, now we're talking maybe 29, 30 bucks is where it could be going, and we'll see where it ends up going from that point. So that is DraftKings, ticker symbol DKNG. The next one, guys, is Foot Locker, which I've talked about a lot on the channel, maybe not recently in the past couple of days, but we've covered it before, and this company completely collapsed after earnings. You guys probably remember it went from roughly $46 down to $36. That was a drop of 22%. No joke, guys. And since that point, it's recovered. We've made higher highs, higher lows, all that good stuff. And now today when I'm making this video, it's up 2%, and it's starting to head towards the top of the wedge again, which we tested a couple of days ago, failed. And we're also right by the 180 SMA, which we also tested a couple of days ago, and we failed. So Foot Locker, guys, it needs to break out of the recent highs here, which in this case, if I zoom in a little bit, you guys will be able to see right around 42 bucks, 42.50, which, guys, we're now at 41.30. We're pretty much right there. So we need to break out of these levels. So I'm going to set my alert at $42.50. Mark is at or above, and we'll see where it goes from that level. We take out that wedge. We're going to see a massive move, in my opinion, back towards the mid-high 40s, maybe 46, 47, and where is where it could be going in the short term. Then we'll see where it goes from there. So that's Foot Locker, ticker symbol FL. And the next one, guys, which is also doing pretty well right now, which we covered a little bit yesterday, but let's talk about it again here for those that missed missed it in my video last night, it is Enphase, ticker symbol ENPH. Enphase right now is up 0.8%, up around $1.80 when I'm making this video, and it's doing pretty well considering yesterday did very well. So it's building off of the gains from yesterday and the past couple of days. Now that I'm looking at it, look, Enphase back on the 11th of this month. A week ago, it was at $193, and it's been uptrending pretty much ever since that point. We hit, $200 the next day, $210 the day after that. We hit around $214 the day after that. $229 after that, and well, today we hit $231. We took the highs out from yesterday, and we're clearly holding an uptrend here on the 5-day chart, maybe on the 10-day as well. Yeah, on the 10-day chart, and you guys can see on the 20-day chart, we're also holding that trend, and we're starting to reverse. Now we're approaching a massive level of resistance at about, let's see, where is that? 230. Yeah, 230. That was the high from the beginning of March about a month and a half ago. And from that point, we obviously failed in the beginning of March. We hit 230, failed down to about 180. Now we're testing it again. So I'm telling you guys, if we take out 230, which I'll set my alert there right now, Enphase, ENPH could really start to take off probably towards the mid 200s. At that point, we might run, I don't want to say straight to 255, but over time, it could get there fairly easily, in my opinion, just judging off of past moves that Enphase has had. And 255 was the high from, I think, the beginning of February. Yeah, beginning of February. So that's where it could go. And maybe initially it goes 235, which was the high from a little bit before that. 255 peak, that was from the 2nd of February. We hit 235. So if we break 230, 235 is the initial gap to fill. Then if that were to break, boom, 255, this thing could explode fairly quickly, in my opinion. So let me know your thoughts in the comments down below, guys. And if you haven't gone up to 15 free stocks yet for Moomoo, what are you waiting for? Use that link down below. Once you open up an account, you get 1 free share of stock. And if you deposit at least $100, you get 4 more stocks, totaling 5 free shares of stock. And if you deposit at least $1,000, you get another 10 stocks, totaling 15 free stocks. And of course, it also helps out the channel. I appreciate you guys as always. And they're also doing a paper trading competition right now, which if you win, you get another up to $1,500 cash, and you get 1 month free of Benzinga Pro. And that runs out here in about 10-11 days, I believe. So make sure you guys get all the free stocks down below. I appreciate you guys as always. And now, cheers. Let's continue on. So the overall stock market today, guys, is not looking too pretty. I mean, nothing's really in the green except for the NASDAQ, which is up a whopping 4 points, up 0.03%. It might as well just go in the red at this point. I mean, other than that, everything is in the red. We have the Dow down 0.1%. Let me pull that up and show you guys. Dow's down 0.1%. It looks like it's struggling right now at the top of this channel, which needs to break on the 4-hour chart. If you're a bull, you want to see the Dow break that and start going 34,700, 35,000 plus. That'd be very bullish for the Dow. Right now, it's not showing that, but you do want to see that if you're a bull. And overall, we do have this inverse head and shoulders on the Dow. We've talked about that before. We have the left shoulder, the head, the right shoulder. Now we're starting to potentially maybe get ready for a breakout. I don't know. It's not showing it quite yet, but we'll see how it goes moving forward. If we do take out 34.5, 34.7 into the 35s, again, that'd be a huge move for the bulls. We probably could go back to the all-time high at that point, believe it or not. I know that's crazy, but the Dow's only down from all-time highs around 7%. That is nothing compared to what we saw, a couple, back in 2022. And of course, the NASDAQ got down 35%. That's recovered a lot of the loss as well. I don't even know if the NASDAQ's in a bear market anymore, guys. Let me see this. Let me pull it up. Triple Q. I think it might still be, actually. Yeah, it's definitely still in a bear market. It's right on the cusp, though. It's down 21%, 22%. The Dow's almost, or rather, the NASDAQ is almost out of a bear market. That is just insane. And it goes to show, I mean, at least as of now, I mean, anything could happen moving forward. We could still be in the bear market for all we know. I mean, technically we are, but we could just dump for all we know and do something like that. But it's crazy to see after such an awful 2022, now things are starting to turn around. Inflation is starting to come down. It was better than estimates, expectations a couple, when was that? About a week ago, right? That's good news. If Triple Q starts taking out 335, guys, we're not in a bear market anymore, right? We're going to be breaking out at that point, which we're not there yet, but we're pretty close here on Triple Q. And on SPY, let me show you this. This one's not in a bear market anymore, guys. This hit 479. That's the all-time high on SPY, and now it's at what, 413, 414. It's up a little bit, pretty much at break even. It is only down 13% from the all-time highs. That is nothing, guys, compared to what it was a couple months ago, where it was down about 27%, right? That was, a bear market. Now we're not in a bear market anymore. That's crazy, right? But it's the truth. We're not in the bear market anymore, and if this does break out of a key level of resistance that we're at right now, 415, starts breaking 420 plus, there could be a huge breakout coming on SPY, no doubt about it. And the Russell is on the verge of a breakout as well, potentially. It's not looking nearly as good as SPY and Triple Q though, but if it does start breaking 1850, which now we're struggling under that point, but if we start breaking that point, that is where 1950 could be right around the corner on the Russell. So yeah, guys, that's pretty much it. We broke down some stocks. We talked about the markets. I hope you all enjoyed the video. Let me know your thoughts down below in the comments. Hit that like button. Make sure to subscribe. And don't forget to get up to 15 stocks from Moomoo, 12 stocks from Webull as well. And feel free to check out my Patreon if you want to see my Patreon portfolio, see the Discord chat, be a part of it, right? If you want to see my charts and thoughts throughout the day, have more access with me throughout the day, that's on Patreon down below, or you can sign up for the YouTube membership. Either one. I appreciate you guys as always. And now I'll see you later.